Hello and welcome back. Hope you're good, doing well. So we are having dollar yen update after the Bank of Japan rate this yen. We're gonna look at the 10-year bond yield first, and if you remember that in the previous video analysis, we were expecting Bank of Japan to change its policy, right? And we are having some change. So they tweaked the policy and they simply let the yield curve to run freely, all right, up to 1%. Okay, but the term they used is the flexibility. Flexibility means that they can buy a bond at any time below 1%. All right, means this means simply that they won't let the yield spike sharply to 1%. And if that happens, and if the yields spike up to 1% sharply, then they will come again at 1% to buy the bonds, they buy the unlimited bonds to push the yields lower. So the terms flexibility came over there. All right, so that's the reason market was a bit confused that where what to do, which way to go. All right, so this is basically was a good move for the yen over longer term. So let's look at that first, and then we're going to talk about what we can expect. All right, so let's look at the previous video analysis first, and then we're going to talk about these images. So I'm going to slightly fast forward. Welcome back. Hope you're good, doing well. So if a very high risk, the Bank of Japan for the yen to keep gaining. Right. So this news just broke out in the last couple of hours. Bank of Japan to discuss yield curve control tweak. Right side, I'm gonna bring the US inflation. You need to understand the policy gap first. That's the US inflation. All right. So if I'm gonna, put the US interest rate on it, USINTR. All right, and Japanese interest rate. All right, BOJ interest rate, APINTR. Okay, this is the policy gap. We clearly can see that the policy gap here. All right, so inflation went up. Fed started to raise the interest rate. No, inflation started to fall. All right, but inflation went up in Japan, but Bank of Japan did not raise the interest rate. They are still holding the interest rate at negative territory. Negative 0.10. All right, and the Fed raised the interest rate. All right, and if I'm going to apply USINTR on this chart, okay, there the rates JP10, right? JP 10 year. So if I'm going to put 10-year yields on it,
you're joining up.
that's the 10-year bond yield, okay, which is standing at 43 right now. So if I'm going to look at that chart, all right, so this chart, just let you know that on this chart. So there we can see that. So the previous, so Bank of Japan is, having that yield curve control since very long. I think since 2016, they are not letting the yields rise above. They are not letting the yields rise above. All right, and there is their band. Okay, the lower band is 25, and the upper band is 0.50. Now, every time when yield goes to there close to 50, Bank of Japan started to create money or started to buy bond, right, and push that yield lower, which is when which is pushing the yen lower. Okay, now we understand that this policy divergence, all right, so the policy divergence is there. So yield is there, the 10-year yields is there, US interest rate is there, Japanese interest rate is there, and inflation is there. Okay, so this is basically the policy. The inflation is falling in the US, interest rate is way high, inflation is now falling in the Japan. All right, interest rate is negative territory, and Bank of Japan is having yield curve control. Now let's get back to this chart. All right, and I'm going to apply the same charts here. All right, the Japanese. So I'm going to apply the Japanese interest rate. All right, and Japanese inflation. All right, so IRYY, so yearly inflation. So there we can see that. Okay, so there we can see. Okay, so where is the inflation? Inflation at 330. Where is the yield? The yield is being controlled by the Bank of Japan. They are not letting yields to go after the inflation. They are not letting the 10-year yields to follow the inflation. They are, holding, capping it. They want inflation to push more higher rather than coming down. That's where they are keeping the ultra loose monetary policy. All right. So and holding the interest rate close to zero. All right. That's where we see their ultra loose monetary policy. That's where we see their ultra loose monetary policy. Yields, you see there, the inflation started to rise. It went higher, and after that, we have seen that the yield started to rise too. Okay, but interest rate is not rising. So there, where they have seen a lot of pressure, the Bank of Japan, when inflation was significantly pushing higher, they were feeling, the bond market was not functioning, and then bond market forced them to change the upper band from 25 to 50. They changed that, all right, and yield went higher. Now they are talking about the news which we have just seen, all right. The BOJ going to discuss that yield curve control. They are saying that the news is saying that they will discuss. Are they going to change that band from 0.50 to 0.75? If so, then this yield, right, the 10-year government bond yield is gonna jump to that band. Or are they going to change it to 1%? Right, so we don't know. There is also a possibility that they're not going to change, which is very likely. Right, they may not change and put that to the next meeting. Or I'm going to say that we're going to do that the next meeting. All right, but this will remain there until inflation doesn't fall aggressively to the downside. Okay, they will keep facing that pressure from the yields. All right, as long as inflation is high, yields will keep tapping those 50 basis point, keep hitting that, right, and will keep trying to break up. So if Bank of Japan is going to change that from, let's say 50 to 75, yeah, we're going to see sharp rise in the yield. All right, so the way we have seen there, sharp rise will come, and then again Bank of Japan can intervene over there, can start buying the bonds over there again. Okay, so we may see that move here. Bank of Japan, I mean 10-year bonds can be sold very, very aggressively, which can cause the yen to gain so aggressively. Okay, yen can get stronger very, very aggressively if that move happens again tonight. All right, or if they let that to go completely up to 1%. All right, 1%, again same, they may intervene again at 1% to push that to lower. All right, the upper band to lower, to calm down the market. All right, so this is very important point. This is very important part, which when they're gonna change that band, which I'm trying to explain over there. For upside, market will also force them to change this negative rate as well. Okay, so are they going to change that negative interest rate within this cycle? Which is very less likely. They may bring that to positive territory, or at zero. They can bring that negative to zero. Right, they can bring that to zero. Zero is there, so they can bring that to zero. So still going to be a very, very big policy change, even if they are just going to tweak that, right? If they are just going to tweak from 0.50 to 0.75, still going to be a big policy change. All right, so what you should look for if that happens, if this policy is, if they are going to tweak tonight. Okay, so tweaking, this is a tweak where they have tweaked. All right, they changed 25 basis point to 50 basis point. Are they going to change for another 25 basis point, or completely 1%, or completely going to abandon the yield curve control? All right, going to let the bond market move freely? If they are going to do that, I mean completely going to abandon the yield curve control, this is going to be a very, very big news for the market. Okay, and that is going to give us a very big move on the yen pairs, if they are going to completely abandon. If they are not going to do that tonight, all right, this situation, as long as inflation is high, they will keep facing that pressure from the market. Now let's talk about the dollar yen. Okay, so dollar yen. Okay, now let's get back to the yield. Okay, so we can see that they tweaked. All right, they tweaked, and the yield went from 0.50 basis point to 0.75, 0.57. All right, but we haven't seen the aggressive move which we were anticipating, by the way. All right, so the similar kind of move, we have seen from 25 basis point. Why we were expecting a similar kind of move. We were expecting similar kind of aggressive move up to the upper band, all right, up to, let's say, we were expecting 75, but they changed to 1%. So that didn't happen. That did not happen. Yeah. So if that could happen, yeah, then the yen could have gained a lot more, but that did not happen. We haven't seen strong aggressive run towards the 1%. So the reason of that is the Bank of Japan introduced a new way called flexibility. All right, so this was their rigid limit. All right, and the term they use that they will let the yield run up to 1%, and this is going to be their rigid limit, means that they won't let the yield goes above. If it goes above, they will buy unlimited bonds and push the yields lower. So that is not the case anymore at this area. But the flexibility means that they can intervene anytime within these within this place. So if I'm gonna look at the this chart, all right, so this graph, so then you're gonna get the idea. So conducting yield curve control with greater flexibility. So this is what the new thing they brought in, greater flexibility. The bank judges that the sustainable and stable achievement of the price stability target of 2% has not yet come in sight. Even inflation is running above their 2% target, but they're still saying that their 2% target hasn't met yet. Even before the Bank of Japan policy rate, the inflation report came that was way above their forecast numbers. So with extremely high uncertainties for economic activity and prices, the bank enhances the sustainability of monetary easing by conducting yield curve with greater flexibility. Previously, what they were doing strictly capping 10-year JGP yields by fixed rate purchases operations. They were not letting the yield to rise above 0.50 basis point. What's new? So range of 10-year JGP yields fluctuation. So they will let the yields move freely to 1%. So conduct of yield curve with greater flexibility. So strictly capping 10-year JGP yields by fixed rate purchase operations. So nimbly conducting market operations. So reference not rigged limit. Range of 10-year JGP yields fluctuations. So means that this 50% is not rigged anymore. They will let the yield rise up to 1%, where they will again can buy unlimited JGPs to push the yields lower toward from 1%. All right, and flexibility means that they can if the move is going to be really sharp towards the 1%, which is not yet, but that can happen. So they can buy at any time. Let's say they can intervene and buy 70%, a 0.70 percent, or 0.80% or 0.90% to slow down the rise in the yield. Okay, and these are their monthly or quarterly bond buying schedule. All right, so July to September. So these are the durations, and these are the bonds. All right, how many bonds they're gonna buy? Millions in yen. All right, and the frequency, there we can see that frequency and schedule dates. These are the dates. So now after having that policy change, we may see slowdown in bond buyings from Bank of Japan. All right, so that the slowdown can come here on this. So what is the flexibility? So flexible previous 10-year JGP yields minus plus 0.50 hard stop limit has now become a general reference level to allow for trading around 0.50%. So control previous fixed rate operations when Bank of Japan offers to buy an unlimited quantity of JGP at a fixed price level on JGP has moved from 0.50% to 1%. So meaning, what that flexible term mean is, so meaning Bank of Japan has effectively widened the 10-year JGP yield hard stop limits to minus plus 1%, but has done so in a way in which it can still cap yields anywhere below 1%. So whenever, however, it sees fit, whatever sees fit means. So this is how Bank of Japan can lift long duration JGB yields and simultaneously mitigate a sudden 2x jump in yields. So that's the reason we did not see, aggressive rise on yield, okay, because they introduced this new way to let the yields go higher slowly, but surely the yield is going to go 1% in coming days or coming months by controlling how the upward path of yields moves. So controlling the velocity of price actions, that's what they're trying to control. They are trying to let the rise slow down. So once we're gonna, this is clear now that the yield is going to rise after the inflation. Yes, if I'm gonna pull out an inflation chart on it, okay, there we can see that the inflation is at 3.30, yes, and 3.30. So 3 point. This is a 10 years, so we're not gonna get yields at 3.30. Yeah, so 1% gonna be enough. It's a 10-year yield. So in next 10 years, we obviously gonna see that inflation gonna fall in Japan. So 1% gonna be enough. So they will let that rise slowly. Okay, they are trying to stop this kind of move, but surely. So will that give strength to the yen? All right, yes, that's what we are expecting. All right, so yield to just keep going up to 1% and yen to gain, and inflation to keep falling to the downside. Okay, that's the image, okay, which is just clear that the higher the yield will go. Yes, and another thing, so if I'm gonna pull out the inflation chart again on it, all right, and I'm gonna pull out the interest rate chart on okay, so once we're going to see that the yield will run after the 1%, okay, then this is definitely going to put pressure on Bank of Japan to change its negative interest rate policy and bring it to at least a zero positive territory. All right, so this is also going to be a big move. So they're not going to change that so aggressively. This is they have already done a very big move, okay, but they downplayed that this is a policy change. They're moving, yeah. So at 1% they completely can abandon that yield curve control. So they are moving towards that, trying to move into a normal policy normalization. All right, and we may see at some point change in interest rate as well. So this is the move which is very important. Okay, so how quickly and how aggressively that 10-year yields goes to 1%. So we have seen some sell-off on the bonds, on the 10-year bonds in JGP, JGB bonds. Yeah, so we have seen some sell-off, but the sell-off is not so aggressive. So it's being controlled by the Bank of Japan. So this is going to come definitely because inflation is high, yeah, and at some point we're going to see positive policy from Bank of Japan. All right. So yes, so if we're going to look at the dollar yen, so we have seen sideways market. We have seen sell off on the dollar yen, and then dollar yen has just recovered. Okay, we have seen news broke out, then again overnight went up, then people started to realize that they have tweaked, all right, and then they started to sell again the dollar yen, but again recovered today. So what we are expecting, we are still expecting the same, okay, dollar yen to start falling for the longer term, but we haven't seen the ideal move, which we were expecting as something like 800 pip move to 1200 pip move. Yeah, so that move could have happened if we have seen stronger sell-off on the JGP from 0.50 to 1%, but that's coming over time. All right, so that's the longer term picture. So we are expecting this move to happen in longer term on the dollar against the yen. So if I'm gonna, yeah, so we still can see another leg higher, guys. That's the point right now. Okay, we may see another leg higher. All right, so price is so So some big banks, they have also changed their longer term picture on the yen. So they are expecting the peak rates at 145. They think that dollar yen not gonna go beyond 145 in longer terms. All right. So we know that there is Ministry of Finance struggling. Yeah, they are trying to push the dollar yen lower. Now we can see that the Bank of Japan is on their side as well. So they're gonna get some support from the Ministry of Bank of Japan. Ministry of Finance gonna get some support from the Ministry of Bank of Japan. So there is still a possibility for another leg higher all the way up to that top. I'm not anticipating, but in case if that happens, you're still looking for a longer term drop on the dollar yen. Right now, where you are paying attention closely for next week. So also after on 10th of August, we are going to see inflation report on the dollar, and inflation is falling. So if we are going to see significant drop on US inflation on 10th of August below 2%, that's going to be a big move. Right now they expect that the inflation going to stay above 3%, but if it is going to fall below 2%, that's going to be a big move. Okay, so you are looking dollar yen to hold that and a short-term move over there, like that small move first. And if it keeps falling, all right, so you can keep extending your target all the way up to these areas. Okay, and longer term target going to be much lower. All right, all the way up to this low. So, but before you look for, or you look at, before you go after this short-term trade, we can see that the trend is slightly aggressive. Right, this move is slightly aggressive. So you're expecting price to hold that, and once you're going to see some price action over there, you're looking for this move. Even if it slightly goes higher, okay, still you are looking for this to fall back within this sideways move and then drag lower for the downside. All right, or we may see this bigger correction over there. So we'll see how this bigger correction evolves over there, but you are looking price to hold that at this move, and if it keeps falling, then keep extending your target after moving on break even. All right, so the important thing is this. All right, the important thing is this. So yield, okay, so we are expecting now yield to move freely and go higher, and that will bring the strength on the yen. Okay, why yield, higher yield is important? So simply, guys, if I'm going to pull out US 10-year yield, US 10-year yield, here we can see that the US 10-year yield is at close to 4%, while this is at the 0.50. So yen is being used to buy. What people are doing, they are borrowing yen from Japanese banks and going around the world and shopping global assets on higher yields. That's what they're doing. All right, the yen is having a cheap cost, while the other currencies are having higher yields. All right, so that's the reason we are having weakness on the yen. So now this trend is going to reverse over time. Yeah, once the yield going to go higher, it is going to impact on the carry trade. Margin going to shrink in the carry trade, and the people, those who are taking yen as a cheap currency, shopping around, now they can reverse those carry trade and wind up those carry trades. So once they're going to start winding up those carry trades, okay, we're going to start seeing the strength on the yen for longer term. All right, so thank you.